All right. Hello, everybody. We were able to snag Casper, the founder of Spartan Group. Very lucky to be able to bring him on stage as well. But a big topic, and I think actually fairly misunderstood topic. So going to try to distill what's going on, trends, regulations, as well as maybe fads, and break down what M&A is all in 20 minutes. So let's try our best. But first, I'm going to tip it to you, Karl, of Ahrend. One, just explain briefly what Ahrend is. And number two, my question is, why would I ever pay you to do this? What does a banker do in this role? I'd rather do it myself and not pay those fees. So, I kid, but please break down, what is it that you do and why is it worthwhile to hire an advisor?
Okay, we work two on one mic. Great. Thanks for the intro, Leah. Thanks for having me. Ahrend is basically a crypto-focused investment banking firm. We have 15 people around the globe, have closed over 25 transactions in the last 3 years since foundation. We're basically a group of ex-bankers from JP Morgan, Deutsche Bank, and Blackstone. And there's a good question of why you would actually hire somebody to work with on, we work primarily on the sell side. Maybe you can also talk to sort of working on the buy side, Casper. But yeah, essentially, why would you pay someone to sell your business? I mean, this is a big undertaking, as you would appreciate, Leah. There is not only a huge, financial work stream around it, but at the end of the day, you're connecting people and you're trying to make something. You're basically trying to make the decision of your life if you're a founder of that business. And as with any, major decision in life, having the people around you that you trust and that you sort of also can challenge yourself with and try to optimize the outcome for you and the team, is something that we, for a decent or for a fair fee would all consider relevant. And ultimately having some people intermediate these very complex discussions that have to take place between sort of the seller on the one side and the buyer on the other side. Just increases transaction certainty by a mile. In any transaction, it's so hard to get even a small transaction or an acqui-hire done. There are so many roadblocks, there are so many pitfalls you can fall into, and it's not always easy for a seller to also address topics that are relevant to them, and that's way beyond valuation only, to basically the people that they will work for after the transaction. And so having someone that can intermediate those tricky discussions is, probably the number one driver for transaction certainty. And yeah, maybe with that over to Casper, if you have any other sort of key points to point out here.
Yeah, sure. Hey, everybody. Name is Casper, co-founder of Spartan Group. So Spartan, we have an investment banking business similar to Ahrend, where we do mergers and acquisitions, fundraising, token launches, token raises. We also have an asset management business called Spartan Capital, where we manage about $500 million of capital in one liquid token hedge fund and two venture funds. And we have Spartan Labs, which is our venture building business. We have about 40 people globally, based primarily in Singapore and Hong Kong, but also with team members in Europe and the US. Me and my co-founders are all former Goldman Sachs kind of bankers and investors. But we started the firm in 2017 when not many people in traditional finance were in the space, and most people were telling us that we were crazy to be doing this, putting our reputation at risk, and that we were kind of wouldn't be successful. So I'm happy that at least until now we've proven them wrong. Just in terms of for any founders out there or anyone else wondering this question about M&A. Just to supplement what Karl said, I would say that, if you do fundraising, I would also advise using an advisor. But if you're a strong founder, you can put materials together yourselves, get a good lawyer, and just use your network and try to raise money. Like that is doable with a good lawyer. I mean, I would still always advise that you use one of us. But on M&A or selling your company as a founder, anyone who's launched or founded a company knows how incredibly hard it is to have your own company and make it successful, let alone get it to a point where you can exit it. And although we hear many stories of people having multiple exits, those are really the exceptions. Most people have one shot at making a life-changing sale of their company. So why skimp on a few percentage fees and risk not getting it right? And it is such a complex process. And the reason why we charge a success fee or percentage fee is that, frankly, although we do many deals, many of them are also just for whatever, like 100 different reasons don't go through, and there's a lot of work done. So yeah, we can talk more about what an M&A process is, but safe to say, even for whether it's a $1 million sale or a $1 billion sale, they're all like very complex transactions.
Yeah, I think that's great. And for anyone who's unaware, I was the co-founder CEO of Valkyrie Investments. We launched some of the first crypto ETFs. That was sold last year to CoinShares as well as the rest of the funds. I say that because Valkyrie, as well as the acquisitions we've done this year, was an asset purchase. And I think most of us typically speak about a topco entity acquisition. So first to you, Casper, can you distill, the different types of deal structures, what you're primarily seeing, and then Karl, a bit more nuanced, in those types of structures, how are you valuing crypto companies who may have, their treasury and their tokens?
Okay, so I'll start with a high level, and then I'll give the hard part to you. So I would say two main ways to think about an M&A transaction. One is probably what most people would initially have in mind is like, hey, I build a company, somebody buys my company, which means that they buy the shares of the company. So you might have some, angel investors might have some shares, your venture capitalists might have some shares, and you probably have an employee share option pool. So all the shareholders basically just effectively sell their shares together to the acquirer. That's kind of the typical transaction, and probably still what we see as the main form of M&A, and at least in the transactions that we have done. But it can come with a lot of complexity in terms of rules around shares, securities laws, tax, cross-border issues. There's another way to do it also, which is you buy the assets of the company. So the way to think about that is the acquirer doesn't buy the shares, they just buy all the content, all the assets out of the company. Instead, and then the shares kind of just stay where they are, and then all the money from buying the assets goes into the company, gets distributed to the shareholders and whatever shareholding percentage they have, and the company gets dissolved. The advantage that can also have, other than tax, is that if you buy a company, it has a history, and then you, as a buyer, have to diligence it. You do what's called due diligence, and they have to disclose everything they've done in the past. You ask a lot of questions, but there's still a risk that you buy a company and either for a reason that the sellers haven't told you or something that wasn't an issue when you bought it, but someone in the past, now something comes up and they have an issue, then you're stuck with that liability. If you just buy the assets out of the company, you're not stuck with that. So those are the two main types, and then it's really case by case which direction you go. Sometimes the seller decides how they want to do it. Sometimes the buyer has a preference.
Yeah, and I want to say there is also obviously good reasons to go for the equity sale, which is that history can also be very beneficial to a buyer, right? If you think about the licensing landscape or the regulatory setup that the business may have, there is also key, I guess, relationship or key partnership agreements that they may have, and that requires the buyer to take over the entire entity and sort of take on that history while obviously having to diligence all the other parts of the business at that point. But yeah, so token M&A, that's actually obviously one of the areas that excites us most, because I feel like this is the basically largest untapped M&A potential. If you think about all these billion-dollar treasuries that are sitting out there, basically underutilized, and we call it basically unlocked or untapped M&A ammunition. And if you think about all these larger ecosystems, networks, it could also be DeFi protocols, they're businesses at the end of the day, right? They may have strategic reasons to sort of horizontally expand their product offering. They may want to vertically integrate their supply chain or get closer to the end user. And so these businesses should and will do M&A the same way we see it happening at the very large end, with Coinbase and Kraken going extremely big on M&A these days. And so, that then leads us to the question of, okay, how are token M&A deals executed and structured? And there's, I think the short answer to it, they won't be structured extremely or in a very different way. Tokens are a means of purchase price, would be part of the purchase price composition, the same way equity and earnouts are in today's world, and cash will be another composition of that. So, we're really looking forward to an era where foundations, DAOs, sort of crystallize on the opportunity that lies ahead of them. There's little competition in basically on-chain M&A. And when we then go one step further and think about how to value these type of transactions in the first era, and so there is a handful of precedents of that, you will likely see token-to-token M&A, so two projects, both having the token, both having the treasury. So the valuation question will rather be relative than nominal, and that's sort of an easier discussion to have. We will need to basically advise with the two decision makers. Could be decentralized, and so you're running governance proposal through DAOs. Could be centralized, so you're speaking to foundations and the labs team or founders, and you have to agree on basically a relative valuation. Where we've done that in the past, those not more complex discussions than in normal equity context. And so, yeah, that's probably the number one area we're looking out for the next 5 years.
Thank you. And my next question is for both of you. So same question. Crypto's global, firms are global, yet jurisdictions have completely different laws. So how do you consider working with different global jurisdictions when you consider M&A, and maybe a recent case example, if there's something that you could share?
One comes to mind, which actually Casper and us worked on together. We just announced the sale of the leading crypto exchange in New Zealand to the second largest exchange in Australia, effectively building one of the largest Australasian exchange platforms. And this is a good example for cross-border, but for me, being based in Europe, also a time zone or a complex time zone project, I think, and I don't know how you at Spartan think about it, but for us, a geography and diversified, basically in the decentralized and also so dispersed space like the crypto space is not a key component of the way we think about our business. It's really about time zone and being close to the client, being available during those sort of key moments of a transaction. And that's why we try to establish sort of hubs around the key geographies we work in. But it's not necessarily the jurisdictions or the legal frameworks itself that determine our business. Ultimately, that's also obviously where we go hand in hand with the lawyers that sort of have the grip on these local, let's say, regulatory frameworks, jurisdictions, and that's why it's not necessarily a huge way we drive or we think about our business. But maybe Casper.
Yeah, so we're based, as mentioned, primarily in Singapore and Hong Kong. But if you look at our venture and investing portfolio, it pretty much maps the global distribution of capital. So I'd say maybe 2/3 is 60% or something is US, and then some Europe and some Asia. In terms of our advisory business, the client base is over time 1/3 North America, 1/3 Europe, 1/3 Asia Pacific, give or take. So we're constantly working with clients across the globe, and they're targeting investors or acquisitions also across the globe. So it's a very global sector, and it's probably in my not short career worked in many different sectors, but it's the most globally minded sector I've ever worked with, which also just shows how we can get appointed by a company in California, and you can get appointed by a company in New Zealand, and like the crypto founders don't even really think about it. They just want to appoint the best advisor. Whereas if you were working in a non-crypto sector, like if you're based in California or San Francisco, you want someone within a 1-hour drive, and if you're based in New Zealand, you're going to get a local boutique to help you, and if you're in Australia, you're going to get a local shop in. If you're in Brisbane, you might not even appoint someone in Sydney. You might want someone who's based in your town. So it's a very global sector. In terms of the actual transaction mechanics, if it's a regional deal, like it's typically done in the law of that region, but many global M&A transactions are done under US law. Some are done under UK law. So it's a lot of the same mechanics and processes that happen regardless of where the assets are based. It's almost if you think of the US dollar as a global, default currency, You can also think of U.S. law as a global default kind of capital markets and M&A law. There's exceptions, like you would still use euros in France, but for deals globally, like on the legal perspective, the U.S. also has this kind of global power.
Yeah, that's right. All right, on our last question. So the panel is M&A and IPOs. So we're going to end up with IPOs here. I think everybody in the room is a bit more familiar with the IPOs and the proposed IPOs in the U.S. market, as well as cross listings. When it comes to CoinCheck, Exodus, Fold, there's been a lot that have happened very recently, and other firms that have announced that they're pursuing an IPO in the United States. However, what we probably, and myself included, don't know as much about is other jurisdictions. So what trends are you seeing in Europe and Asia and or any other jurisdictions you're comfortable speaking about for IPOs?
Yeah, I mean, the local IPO markets are a lot more difficult than the US market. In general, there's less liquidity, there's less research coverage, there's less investors. So it is, you see even very successful companies in Europe and Asia often targeting a US listing. Also, the openness to having a crypto first or Web3 company listed in different jurisdictions is kind of mixed. And even if you get listed there, like the investor base doesn't really know how to think about it, because let's say you're a Hong Kong listed company, if you find retail investors that are interested in your stock or even institutions, they're going to look at that, and they're also going to look at Bitcoin, Ethereum, Solana, and say like, why don't I invest in that, or why do I invest in Coinbase or in Sol Strategies, or like there's other options too. So in general, it's quite difficult outside the US, and the IPO window in general hasn't really been open globally. We're hoping it'll open up this year. It's been more kind of an M&A market, or I think the last panel was talking about late stage private equity or late stage investing in this space. That's definitely been one of the challenges so far. It's just we haven't seen a lot of like exits and a lot of paths to exit.
Yeah, and I think the crypto space is in no way different to other markets in that it lags internationally or outside of the US. And so, as you're saying, we have probably 2 or 3 handful big IPOs coming in the US this year. But, we wouldn't expect, I think, a similar, a number of deals even happening globally outside of the US. You mentioned CoinCheck has chosen the US for their primary listing. Amber now reverse merged again in the US. And so even international players, if they have some path to a listing in the US, they would always prefer that over the local listings. And then I think we need to wait for that wave to actually succeed and get across the line before then also more localized venues open up. And then hopefully we'll see some deals in Europe and Asia soon.
That's perfect. Well, Casper, Karl, thank you so much.
Thanks, Leah.
Thank you.